Hello everyone, welcome to today's session. Good evening. So today we are going to continue chapter number 5. Okay. In last session we discussed about SA 500 and SA 501. Basically we discussed about audit evidence and special considerations with respect to the audit evidence that we discussed in the last session. Okay. Anyone having any doubt in this particular topic, SA 500 or 501? Anyone? Any doubts? No? Okay. If no doubts are there, can we go and let's solve some questions on SA 500 and 501 that will help us in revising the topic? Okay. We'll solve few questions on this topic and then we'll proceed to the next particular topic. Okay. So you have a question on your screen which says that the engagement partner of the audit team of High Inventory Limited assessed that the inventory is material with respect to the audit of the financial statement for the current period. Upon inquiries with the management, the engagement partner identified that the management will be performing an annual physical inventory count at all warehouses where the entity stores and maintains its inventory. Moreover, management confirmed in the written representation that they will be performing 100% physical count of the inventory for the current period. As a result, engagement partner decided not to perform any physical count as it will be a duplication of work. Moreover, he decided that the written representation from the management stating the inventory exists in the appropriate physical condition will be sufficient and appropriate with respect to the audit evidence. To conclude that the inventory balance in the financial statement is free from material misstatement. Now you have to comment in the light of SA 501. Take a minute, read the question again and then try to comment.
Sir,
Yes.
here the engagement partner is not appropriate as the only as the management has done the counting work of the inventory is not sufficient audit evidence, and it is not substitute the responsibility of the auditor to do not check again the inventory of the company.
Yep. Yes.
So he has to done the proper audit procedure over there, and written representation will not reduce his responsibility.
Understood. Yes. Very good. Yes. Anyone else would like to add something more? Anyone? Okay. So let me discuss then the answer. Now, first of all, what SA 501 says when it comes to the inventory, that auditor is required to obtain sufficient and appropriate audit evidence with respect to existence and the condition of the inventory. Now, we have already discussed multiple times that written representations are not the sufficient and appropriate audit evidence. When we were discussing SF 500, we discussed that in order to call an audit evidence as an appropriate audit evidence, I'm not talking about as of now sufficient part, just the appropriate part. If I want to call audit evidence as an appropriate audit evidence, I have to talk about two important aspects: relevance and the reliability. Written representations do not have that much reliability. Okay, that's why I don't call them as an appropriate audit evidence. Number two, sufficient. Now, inventory is a material, so I need higher audit evidence in order to get the comfort, or to on the assertion that in the inventory balance in my financial statement is free from any material misstatement. Now, when I talk about that quantity sufficient, for that, performing inventory count by management is in control. Understand that management inventory count is a control. I can rely on the control, that is for sure, no issues in that. Rely. But whether only reliance on the control is sufficient, we have seen that in SA 330 also, that you need to perform test of details irrespective whatever reliance you keep on the control part. You cannot say that you will not perform any substantive procedures. Remember, now considering all these things, only relying upon the physical count that is performed by the management, and not performing any other audit procedure, is not having appropriate and sufficient audit evidence to conclude that the inventory balance in the financial statement is free from any material misstatement. Okay, so here partner is incorrect. Let it be the duplication of work. There is no issue, because it's not actually duplication of work. We have to perform some audit procedures. We have to perform some audit procedures, and then on the basis of that, whatever evidence we will gather, we'll comment on that. So let us see the answer, how it is written. Okay, and then we will also learn that how to write the answers. So, okay, let's see over here. First, when we start writing the answer, what we will do is we'll provide the reference to that particular standard. In this case, if you see here, the reference is as per SA 501 audit evidence special consideration for selected items. A reference was provided to SA. Okay, I provided a reference to the SA and then explained what is the requirement within the SA. This is nothing but the requirement that when inventory is material to the financial statement, obtain sufficient and appropriate audit evidence with respect to existence and condition of the inventory by these two items. Remember what? Test of details, test of controls, and these two items were test of details. This is evaluate management instructions, observe the performance of the management count process, inspect the inventory, perform test counts. Remember in last lecture we did this. So you do by attending the physical inventory count, unless impracticable to do so. Remember a star mark that we discussed when it is not practicable to attend the inventory physical count. Okay, then you have performing audit procedures over the entity's financial record to determine whether they actually reflect the inventory count results, like passing off adjustments. Okay, passing off adjustments after performing the count. And this is something at the attending the physical inventory count involves these particular part. Then you over here correlate that hence in the given case approach of the engagement partner is not appropriate. Okay, this should be done by performing various audit procedures like attending physical count, observing the count, inspecting the inventory, and reperforming the physical count. So this is how you should answer this particular question. So this part is usually known as a conclusion. So in the end, we provide a conclusion on the whatever scenario it is there by correlating the provision that we have quoted over here plus the given case scenario. Clear? Any doubt? Any doubt? Okay. If no doubts, let's proceed to the next question. COCCYX Limited supplies Navy uniform across the country. The company has 3 warehouses at different locations throughout the India and 5 warehouses at the borders. Major stocks are generally supplied from the borders. COCCYX Limited appointed Messrs. Opaque and Company to conduct its audit for the financial year 2021. Mr. P, partner of Messrs. Opaque and Company, attended all the physical inventory counting conducted throughout the India but could not attend the same at the borders due to unavoidable reasons. You are required to advise Messrs. Opaque and Company how sufficient and appropriate audit evidence regarding existence and conditions of the inventory may be obtained. Number two, how is then auditor supposed to deal when attendance at the physical inventory count is impracticable? Read the question, take a minute and try to answer them. Come on, guys. We have discussed this part. There is nothing new. It's a similar question on the similar line. I'll give you an hint that SF 501 will be applicable. That we all know.
Sir, attending or arranging another auditor to attend the third party verification or require report of the type to report and or confirmation from management to uh, issuing of stocks and balance of the inventory. And so third part is, if possible, to observe another report or the auditor's report also, and inspect document of third party which is provided in the type to report.
Okay. Now here, the question has only one particular company, that is COCCYX Limited. There is no third party involved. So type 2 report, or you can say, work of another auditor will not be, there in the picture.
If possible, then physical verification done by the auditor himself, or if the scenario is changed when no stock lied in third party, and if and the other audit procedure also followed by the auditor, like stock moving is a cutoff date and other balance inquiries, confirmation from the um,
Okay. Okay, good. Anyone else would like to add something more to this? Anyone? Ginny, Vignesh, Hemant, anyone would you like to add anything further to this? like what auditors should do when they are not able to attend physical inventory count conducted at the border areas due to unavoidable reasons. Okay.
Sir,
Yes.
if the auditor cannot attend due to some unavoidable circumstances, then he can appoint any other person over there where he cannot reach to do the counting work and to provide him also, and he can also take the existence and condition of the inventory by, as you have told us in last lecture, by the video calling also. uh, then he can to obtain the sufficient appropriate audit evidence.
Okay. Anyone else would like to add something more?
Sir, here is one document is bill of landing. He can also check the bill of landing issued by the carrier of shipper goods.
Yes. Yes. Good. Basically, correct. So let's say, for example, where we are not able to attend the physical inventory count conducted through, conducted at some locations where it is not feasible because of some unavoidable reasons. Now, there are two things. One, how to obtain sufficient and appropriate audit evidence. See, the requirement of the standards, it's pretty much clear. When it comes to the obtaining sufficient and appropriate audit evidence, we need to check for the test of controls and the test of details, the two items that evaluate the management instructions, observe the inventory count, then inspect the inventory and perform the test counts. These are the four things that you must do. Post that, verify the results that are there after the inventory count with the books, the inventory which is in the books. So whether the inventory which is actually present is matching with the inventory which is recorded in the books of account, to understand whether the impact of the deviations have been passed in the system or not. Okay, so these are the things that we need to do. Now, coming to the second point, where auditor is not able to attend physical inventory count. See, here the thing is, if it is impracticable that he is not able to visit because of XYZ reason. Now, there are two things that we need to understand, which is whether it is possible or not possible. I'm not talking about feasible. Let's say, for example, your inventory is lying somewhere in the northern hilly regions, where if you want to go and perform the count, it will be very costly. That's why you might say, okay, it is not feasible to perform the count. Hypothetical example, your inventory is lying Ladakh or Leh somewhere. Okay, and you say that, okay, no, going there it will take a week, it will incur a lot of cost more than the amount of the, what you can say, audit fee and everything, so it is not feasible for me to perform the inventory count. Okay, so that will you call as an impossible? Let me write and explain this one. So let's say inventory is lying in Ladakh. Okay, so it will take, let's say, 1 week.
Sir, screen is not visible.
Yes, yes, yeah. Just let me know if it is visible now.
Yes, sir.
Yeah, 1 week to travel plus cost of travel is rupees. Let's say you need to bring whole team, stay, everything. It will cost you 3 lakh rupees, which is, let's say, 30% of audit fee. Now, will you call this particular scenario as impossible or impracticable?
It is not impossible, but it is economically not feasible.
Yes. So it is not, it is possible. I cannot say this is not possible or it is not impracticable. Okay. So these two terms are very, very important to understand, impossible or impracticable. And the third term, that is we are talking about, infeasible. Now, when I say it is this particular term, infeasible, that is financially, economically, it is not feasible to perform. Means it is difficult. This means it is difficult to do, but still it can be done. It is difficult to do, but it can be done. Now, this particular term straight away says that it is not possible. In that case, we need to first understand whether this particular scenario is not feasible or impracticable. So here it is given, it is impracticable. Once you decide this is impracticable, it is not, kind of possible to you for you to go. Okay, in that case, okay, now I need to do something different. Now I need to do something different audit procedures to gather sufficient and appropriate audit evidence. But if I say it is not feasible, it's not an option. Just because it is not feasible, you should, it is difficult to do, you should not avoid this procedure. So difficulty cannot be a reason to not perform a procedure. Understand that. Yeah. Unavoidable reasons, you cannot attend because of XYZ reason, which is impacting your actually physical presence over there, making it impossible to do. Different story. So first you need to understand what is a scenario, and then accordingly I need to perform additional procedures. Okay, so here it is said that it is impracticable to do so, means something is making it impossible for me. Now in this scenario, I need to find out other audit procedures, that if I can send someone over there that who can perform inventory count for me if feasible. If not feasible, then I need to understand what is the materiality of the inventory that is lying at the border place, which is not counted. Okay, let's say for example, major stocks are supplied from border. Over here it is written that major stocks are supplied from the border, means at the border the stocks which are there are material compared to the overall inventory level. So I need to then think of alternate audit procedures to gather sufficient and appropriate audit evidence, and that could include that I may check the inventory records, that okay, how much of the inventory was issued subsequently from that particular place in which has been delivered to the clients or customers. If that record is available, that can also give me some comfort, or if I can check documents for those shippings from border place to nearby areas, or as you said, the bill of lading is there. Or I can, what I can do is, let's say for example, by performing alternate audit procedures, multiple procedures, I'm still not able to get the sufficient and appropriate audit evidence. In that case, I have to qualify my report, I have to modify my report. Clear? So the thing here is, inventory count which is not practicable, impracticable, okay, that is different, which is I would say having difficulty. Even in the answer for this particular question, if I just show you, we'll read the answer. In some cases, attending physical inventory count may be impracticable. This may be due to factors such as nature, location of the inventory. For example, where inventory is held in the location that may pose threat to the safety of the auditor. The matter of general inconvenience, to the auditor, however, is not sufficient to support a decision by the auditor that the attendance is impracticable. Means if it is not feasible, that is not equal to impracticable. And if something is taking a lot of cost, time, okay, difficulty, and if I say that it is taking a lot of time, it is taking a lot of cost, it is very difficult to perform, that's why I'll not perform, is not a valid basis for the auditor to omit an audit procedure. So just because it is difficult to perform, I cannot eliminate, I cannot omit an audit procedures. That is lack on my side as an auditor's side, for which there is no alternate or there is no any other way to satisfy me. Let's say, for example, in this case, hypothetical example, in this case, it was possible for me to visit, but it was costlier. Okay, and I just because it was a costlier and difficult, I decided not to perform and to qualify my report, and that is incorrect. So we have to be sure that whether it is infeasible or impracticable before omitting our audit procedure. And rest part is the same that we have already discussed. That is, you need to evaluate management instructions, observe the performance of management account procedures, inspect inventory, perform test counts. Rest everything is same. Clear? Any doubt?
Sir,
Yes.
in case we have to appoint another person for performing those procedures on behalf of us, and the area is such that any person who is local to there can only perform that procedures, but we don't have any idea about the person who can be there, or we don't have any data available with us about such persons who are available there to perform such services for us. What to do then?
See, in that case, basically, let's say, for example, you are let's say, for example, a local can perform the particular inventory count procedures because we cannot go. And if you don't have a data, basically, to, reach out to someone in that particular area, and you also cannot go because it is not possible for you to go. In that case, I'll try to perform some alternate procedures to gather audit evidence. But if I'm still not able to get all the audit evidence, then I will qualify the report.
So practically, which procedures are followed to find some person in local areas? Is there any site or agencies who maintain such data?
Usually no, because what happens is that is something done on a, what you can say, each and every firm has a bit of different process, I would say, in this regard. Some chartered accountant firms prefer to work with only known persons. Some prefer to work with the chartered accountants only. So there are different norms which are being followed with different firms. But usually there is no such website or no portal where you have all such listing available.
Okay, sir.
Any other doubt? Any doubt? No? Okay, if no further doubts, can we proceed to one more question that is also a very good question. Okay, let's go through that question. It's good one. Mr. Shreyans, while performing the audit of Red Rock and Silver Sands Limited, which was involved in phosphorus mining, decided to appoint an auditor expert for the valuation of environmental liabilities and the site cleanup cost. Red Rock and Silver Sands Limited reappointed Mr. Sheetal as an independent expert from this engagement. Okay. From the last 5 years, management has been reappointing Mr. Sheetal. Mr. Sheetal calculated the environmental liabilities pertaining to two completed mining sites and the sites which will be discarded in the near future, and a provision for the cleanup cost. This provision was accepted by the management. Mr. Shreyans, after performing inquiries with the management, was of the opinion that the objectivity of the independent expert cannot be questioned just because he was appointed by management as their expert. Hence, there is no need to raise a question on the objectivity of Mr. Sheetal or on his work performed for the company. However, the audit partner was of the opinion that the audit team needs to evaluate the objectivity of the expert engaged by the entity, irrespective of the fact that he was appointed as an independent expert. Kindly guide the audit partner and Mr. Shreyans with respect to the requirements pertaining to evaluating the objectivity of management expert. Take a minute, read the question again, and then try to answer. Come on. So, what do you think? What should the audit partner and Mr. Shreyan should do? Anyone? What do you think the Mr. Shreyansh and audit partner should do in this scenario? This is the same something we have already discussed in the past, but again, yeah, on the similar lines, I would say. No, no one. Yes.
Mr. Shans is right. He can challenge the work of Mr. Sheetal, and he also checked the reliability and competency of Mr. Sheetal's work, and so mere just only says that he is expert appointed by the management is not sufficient for doing the rest of audit procedure. And we also checked the accuracy of information and the data on which he rely, and doing other calculation on for provision and his work.
Okay. Okay. Good. Good.
Sir,
Yes.
as Mr. Sheetal was reappointed by the management, and he was associated with the entity in earlier years also for a long period of time. So there can be a threat to the objectivity and independence, as there can be a familiarity threat with the expert and management. There can be a fraud, as the liabilities and provisions regarding the such liabilities is an estimate where management can override the control. So fraud risk factor is also involved. So he have to consider such points and accordingly do the procedures and not just rely plainly upon the experts.
Absolutely correct. Very good. Yes. So the thing here is the expert which is appointed by the management was reappointed by the auditor. Now for the same thing. So management was reappointing this particular expert. Now auditor has appointed this particular person as an expert, auditor's expert. The problem here is that in the past, whatever work he has done, now as an auditor expert, he will be checking that work again. Plus, in the past, whatever work he did, there can be a question on that work because of the objectivity, management bias net that we already see. Once an management expert will be always a management expert for that particular work. So let's say, for example, he evaluated the environmental liabilities and site cleanup cost for the let's say next 5 years. So till the 5 years, okay, he performed everything in 2020, but he calculated for the next 5 years, which now management is following. It doesn't mean that, after 2020, he will stop being management expert. No. Till the time management is using his work, he will be management expert for the auditors. And auditors cannot appoint management expert as their own expert. It will not only create, issues to the objectivity, but it will also create self-review threat. As a result, the audit director over here is absolutely correct that the audit team needs to evaluate the objectivity of an expert, irrespective whether he's an independent expert or not. We need to evaluate the objectivity, we need to evaluate his independence, and then only we need to appoint him as an expert, auditor's expert. Before that, we cannot appoint him. The same is here. So I'll just show you quickly an important part over here, that audit team should evaluate the objectivity of an expert engaged by the entity as a threat to objectivity created by being employee of the entity will always be present. An expert appointed by the entity cannot ordinarily be regarded as more objective than other employees of the entity. Just because he's an expert, he's more objective should not be, the case. Because at the end, he's appointed by the management, for the management, working for the company, just like other employees. As a result, just he's an management expert, I will say that he's more objective. That is incorrect. Audit partner is correct. They need to check for the objectivity of this particular expert. Clear? Any doubt with respect to this question? Any doubt? No? Okay. If no further doubts, then let's proceed to our next topic that we want to discuss. Okay. So the next topic that today we are going to discuss. So what we have discussed till now, I'll just give you a quick recap. We have discussed SA 500, 501. Now we will be going to 505. SA 505 basically is a very important essay that talks about external confirmations, which we have seen, which we have, seen some of the portions of this particular essay when we were talking about, litigations and claims that we may send external confirmation to external legal counsel, something like that. So over here, now we will understand the process of sending the confirmations, the type of confirmations and everything. Okay, so we will go and we will perform a deep dive with the confirmations process. So SA 505, external confirmations. Now, when I talk about external confirmation, basically, why do we need to have a standard for this? The need of a standard in this scenario is because that we need to understand that what is the responsibility or what is the requirement for the auditor when they are using this method, external confirmation, as a method for obtaining audit evidence. Now we already know that audit evidence which is obtained from independent source is more reliable. Audit evidence which is obtained directly by auditor is more reliable. Audit evidence which is existing in the documentary evidence or in the documentary form, written form, is more reliable. So to make audit evidence more reliable, remember the one of the criteria for appropriateness, relevance and the reliability. To make audit evidence more appropriate for the purpose of testing, we need to follow certain things, we need to follow certain procedures, and that is enumerated and that is listed in SA 505. That how you can get more reliable external confirmations. Okay. Even SA 330, when we are designing or the audit procedures and implementing the audit procedures or overall response to the assessed risk, at that point in time also we discussed that some of the procedures will be external confirmation based. Okay. Even in case of SA 240, we may send some external confirmations with respect to the fraud risk. SA 500 we discussed, SA 501 we discussed again the importance of the audit evidence and external confirmation. Now the thing here is that before we proceed to understand the procedure, we need to understand the type of external confirmation. And what is an external confirmation? So I'll give you 3 examples and you tell me which one will qualify as an external confirmation. Mr. A, he's a customer. Okay, so he is customer of company. Shared his accounting, or you can say balance statement, balance ledger by his own, which was shared with auditors. This is the first one. Okay. Second, Mr. A, again the customer of the company, shared his balance ledger to company on company's request, which was then shared with auditor. Now third confirmation, Mr. A shared his balance ledger to company on request of auditor, which was then shared to auditor. Now tell me which one is the balance confirmation or external confirmation over here. Which one you call as an external confirmation out of the 3?
Third one, sir.
Third one. So one goes to the third one. Anyone else?
The third.
Third one. So another to third one. Anyone else?
Sir, can you please repeat the question, as due to internet connection, I could not hear
So
it.
I have written 3 examples over here that Mr. A, who was a customer of the company, shared his balance ledger in the first example by his own, and then that was shared with the auditors. Second, Mr. A shared his balance ledger to the company on the request of the company, which was then shared with the auditors. Third, Mr. A shared balance ledger to the company on request of auditor, which was then shared to the auditor. So, out of all the 3, which one will you call as an external confirmation? Now, I'll just add one thing here, that he shared by his own to the company. and then it was shared to auditor. So what do you think? Which one is an external confirmation?
Sir,
Yes.
sir, number one is not definitely the external confirmation. I confirm that.
Mhm.
Out of 2 and 3, I will go for 3, sir.
3. Okay, 3.
Sir, third one.
Third one. Okay, third one. Anyone else? Anyone? Like, which one is an external confirmation according to you?
Sir, all of them.
All of them. Okay. Okay, all of them. Now, that is the first thing that we need to understand. That external confirmation, out of these 3, one is not there, that we understand. Second is also not there, that we understand. Third is also not there. None of the 3 is external confirmation for me. I cannot accept any of these as an external confirmation. And I will tell you the reason why. Because when I talk about external confirmation, for me as an auditor, as per the standard, it is an audit evidence that is received by the auditor directly. So audit evidence obtained audit evidence obtained as a direct written response to the auditor. Direct written response received to the auditor. In this case, have we received any response directly? Answer is no, because which was then shared to the auditor, which was then shared to the auditor, which was then shared to the auditor. It was never directly received by the auditor. None of them is an external confirmation. Now, 2 more examples. I'll give you 2 more examples and then we will add to this definition something more. Mr. A, again, customer of company, okay, shared the ledger statement of ABC Private Limited, okay, where he was an, you can say, agent. So Mr. A was an agent for ABC Private Limited and he is also separately customer also. So he's a separate customer plus he's an agent for the ABC Private Limited. So he shared the ledger statement of ABC Private Limited where he was an agent to the auditor directly on auditor's request. Second, Mr. A, again, he's a separate customer. And ABC Private Limited is a separate customer. So shared, or rather not shared, I would say called auditor to confirm outstanding balance of ABC Private Limited, where he is an agent. Okay, he's an agent. So he called a auditor to confirm the outstanding balance of ABC Private Limited, whereas he's an agent. Now ABC Private Limited is also a customer, so they both are separately customers registered with the company. And but Mr. A, being the agent of ABC Private Limited, he's confirming the balance ledger statement in the first case to the auditor directly. In the second case, he's calling the auditor to confirm the balance. Which one is the external confirmation?
First one.
सर दोनों ही नहीं.
Okay, so one is first one and second is none of them. Okay. Anyone else? Why first one?
Sir, considering first option as a written communication, I am confirming to the first object. And the second option is over calling, that is orally. It is not preferable for external confirmations.
Okay. And like as you said that none of them. Why? Any specific reason?
सर ऑडिटर खुद डिसाइड करेगा कि उसको कौन से एविडेंस चाहिए और उसके लिए खुद मैनेजमेंट से जाके परमिशन लेगा कि उसको राइट दे दे उनसे कंफर्मेशन के लिए. देन और कॉल्ड ऑडिट एविडेंस, मतलब जो हमें चाहिए एक्सटर्नल कंफर्मेशन के रिगार्ड में.
Anyone else with a different answer or something they want to add to this? Or which one is an external confirmation? Anyone? No? Yes.
Here we consider the Mr. A is a customer. It is okay, but he is agent also, and he is also the part of the company, na?
No, not part of the company. He is an agent of the ABC Private Limited. He is not part of the company.
Okay.
So he is not part of the company. He is just an agent for the ABC Private Limited. ABC Private Limited and Mr. A both are the customer of the company separately.
Excuse me, sir.
Yes.
Both are the customer means
Means they both have separate transactions with the company. It's not like that only ABC Private Limited is debtor or the customer of the company. A also purchases something from the company on individual level.
तो सर ये एबीसी प्राइवेट लिमिटेड कंपनी है या किसी तीसरी कंपनी की कस्टमर है?
Let's say the original company which is being audited. So Audit is something you can say XYZ Private Limited. We are auditing XYZ Private Limited. Okay. And Mr. A is a separate customer. ABC Private Limited is a separate customer of XYZ Private Limited.
Okay, sir.
You are the auditor. Now, this is a particular scenario.
The sharing balance of ABC Private Limited in the books of Mr. A is not relevant for my purpose of audit because I am auditing XYZ Private Limited. Na?
So, he is sharing balance of ABC Private Limited on behalf of ABC. Mr. A is sharing on behalf of ABC the balance.
It is not correct, na sir?
Yes. So, the point over here that we need to understand is that the external confirmation we need to receive, okay, should be from the confirming party. So this is very important part. Auditor should receive direct written response, okay, from the conforming party. That is ABC himself, ABC Private Limited should conform in written form or in paper form.
So we were interpreting as ABC Private Limited is our auditee and Mr. A is his customer.
Okay.
And that's why we were giving that answers.
Okay. So basically here the confirmation should come from the conforming party. Then only I can count this particular confirmation as a valid external confirmation. Okay. So that is the first part where I wanted to discuss what is external confirmation. Okay. Now, the second part that I want to discuss is the type of external confirmations. Can anyone tell me the type of external confirmations? Type with respect to how we draft it.
Responsive or non-responsive?
Okay.
Positive or negative responses.
Correct. Yes. So there are two ways to draft the external confirmation. One is a positive confirmation request. Second is a negative confirmation request. So can anyone tell me what is the difference between both?
So difference lies in the type of response that we are getting from the confirming party to whom we have sent this confirmation request. If the balance is, if for example, if the balance is mentioned in our request letter is something that is in line with the balances in their books of accounts, and where the auditor is specifically mentioning to the party that they have to respond if they are in disagreement, then it's a negative confirmation request.
Sir, positive confirmation, that means indicating whether he is agree or disagree. Negative confirmation only is he is disagree.
Okay. Okay, good. Anyone else? Anyone else? No? Okay. So yes, correctly said. So when I talk about negative confirmation, it is a request. The party has to provide the answer when he disagrees. So the response will be there only when there is a disagreement. Respond when there is a disagreement. And when I say positive confirmation, it is kind of a response that, whether the balance which is being there or whatever we are asking, he has to confirm. If we do not, receive, it will be counted as a non-response. So the party has to confirm whether he agrees or he does not agree. Okay. So respond with agreement / disagreement, and no response is kind of taken as a that we have not received the confirmation. No response is taken as no confirmation received. Or over here in the negative part, no response means everything is fine. Okay, so that is a basically difference between the positive confirmation and the negative confirmation. If I have one particular example, I can also show you Just let me see if I have the example of the confirmation request that was there for the negative side, so that you can understand, how it is drafted and how we share with the customer. Yeah, let me share my screen. So this is just a draft. It is not the real one. It is something, you can say, draft particular one, which is a dummy data. It's not the real data, it's a dummy data. So this is the date, customer name, address. Okay. Then you have a confirmation of account balances in connection with the audit of the financial statement of this particular company for the year ended 31st March 2024. We are requesting you to confirm the balance owed as of the date. Our records indicate that your account balance is this one, which was rupees this. If the amount is incorrect, then please contact or email address, whatever is there, by this December. If we do not hear from you by December this, we will assume that the balance stated above is correct. Thank you sincerely. And this is one of the example of the negative confirmation that we auditor shares with the particular customer. Okay, one draft. The information in this particular one is not correct. It's an example information. So don't say that, like company data. This is not a company data. Okay. Now, the question comes is, okay, we understood what is external confirmation, the type of external confirmation that we understood. So when we are using the external confirmation, what is the thing that auditor is required to do? So there are some specific things or specific requirements of the standard that is required to be followed when we are sending the external confirmation. You can say external confirmation process or procedure. Anyone with who has actually shared the external confirmation while auditing? Anyone has prepared the external confirmation? So if anyone has prepared, then what do you do when you are preparing or using the external confirmation? What procedure do you follow?
So prepare a list which we need to take an consider confirmation. And second thing, um, so request from management to allow us to take the confirmation. Matlab authorization is given by the management.
Yes.
And then send the letter for confirmation the balances which are like ARAP, the balances fall in the books and they actually recover from the companies or pay by the us.
Okay.
Or so just like a bank balance is confirmed by the banker also. Here are some examples: ARAP, bank balance, and
Okay. Good. Yes. Anyone else would like to add something more to this? Like, how do you perform the external confirmation? What procedure do you follow? Okay. I will show you what procedure I follow and the standard requires us to follow. So number one, when we are sending external confirmation, so using external confirmation, the first and prime and important thing that we need to take care is the control over the external confirmation request, control over the process. So the auditor should maintain the control. That's the first thing we need to understand. Auditor should maintain the control over the external confirmation process. Now, what that means? That means that from start to end, auditor should be the person who should be deciding what to be done, how to be done, to whom the confirmation should be shared. Okay, so the first thing is to decide from where or from whom we need to confirm the balance, like which are the data, selecting the correct data, selecting the banks, or selecting the appropriate external legal counsels, to decide who are the persons or who are the third parties to whom we will be sharing the confirmations, or what is the information that we want to be confirmed. So deciding the information to be confirmed, which information we would like to get confirmed. Sometimes we may choose that, okay, we will try to get confirmed the transactions instead of the account balances. Yes, that is also approach sometimes followed, that details of the transactions are shared with the confirming party and asking them to provide similar details from their end if they confirm. If they do not confirm, then provide the whatever discrepancies are there, and then on that way they confirm the transactions, not of the account balance but the transactions also. That happens. So deciding which information we want to confirm from the third party. Then comes the selecting the party, selection of the appropriate confirming party. Now this is very important. This part is very important. Reason because that if we select incorrect party, if we select parties which are kind of, let's say, who are not going to respond based on our past trend record or past record, that these parties are not the parties who respond, or these parties has never responded to our confirmations, selecting such parties will be it will be a waste of time. So we need to be aware that, okay, which are the parties that we are selecting, what is the past trend in those scenarios, what is their balance, materiality of the balance that we are looking at. Okay, what is the fraud risk associated with those parties? For example, there was a person to whom we were supposed to send the external confirmation, but in the news it was out that the person is in the jail because of some fraud. Now we know that if he'll send the confirmation, he will never respond to it because he's in the jail now, or he's into the fraud. So we may not get the authenticity of the confirmation. There's a fraud risk. So accordingly, we need to understand which is the party from whom we need to confirm. Okay. Or maybe the person, let's say for example, we want to confirm a balance of a private limited company. In private limited company, to whom you will share the confirmation? Director, shareholder, finance manager, or employee, to whom you will share the confirmation. So who is the most appropriate person in that institution, in that organization? Let's say for example, there is one big company, MNC, of whose you want to confirm the balance. To whom you will share the confirmation? You are in touch only with the procurement manager of that particular company. Is the procurement manager's confirmation sufficient for you, or you need someone else from that particular company to whom your confirmation will be addressed? A lot of things are there when we decide the party to whom we are going to send the confirmation. The next steps comes is designing the confirmation request. Now, why this particular step is very important? Designing the confirmation request.
Depending upon our requirement, we have to choose which form of confirmation we have to take, like a positive or negative.
Yes.
That's why the design is important.
Absolutely correct. So the type of confirmation, to whom we are going to share, everything, what we are writing in this, what written address we are providing in the confirmation. So for example, you send a confirmation, but you do not add a written address that okay where he needs to reply back. The confirmation is waste because you never provided him where to reply back, on which address he needs to reply back. Second thing, when we are designing the confirmation, are we adding some balances in that, or it is an open-ended confirmation like okay, confirm your balance of ABC Private Limited? Sometimes we have to send open-ended confirmations also without specifying the balance in it, so that the person can provide his balance without knowing what balance is there in the company. Are we specifying that directly send this confirmation to the auditors? Do not send it to the company. Something like that in the confirmation. So designing the confirmation request is very important aspect. We also need to add the management authorization letter in this, that management has authorized us to obtain confirmation from you. Sometimes language is also an important part. So for example, you are taking a confirmation from a Japanese company, might be small company, they are not aware of the English language or something like that. They are not, good at the English language. Or let's say for example, XYZ country where the English is not that much spoken. You want to confirm the balance from that particular customer. Or let's say the customer within India, he doesn't know the English, but he knows the local language. Sending a confirmation in the language in English might be troublesome for him because he might not have the appropriate knowledge of the language. So what language you are using is also important. And the next part here is how you are asking him to confirm back. So sometimes we say that okay, after filling up the form of the confirmation, send us courier or post on this address, or scan and send us on the email. Or we sometimes send the cover letter with appropriate stamps, that okay, this is stamped appropriately, just add the confirmation, close the seal the cover and drop it in the any post box, something like that. So how is the confirming party is going to send you back? The mode of sending back is also very important. So designing the confirmation request, very critical. And then the next and very important part, sending follow-ups, or sometimes basically it is verifying the response. So we need to send follow-ups and we need to verify the response also that we have received. Why we need to verify the response? Can anyone tell me?
To check whether the response is coming from the party from whom we are expected to get.
Okay. And how will you check that? Anyone? Like, if you can tell.
So जो response हम लेंगे in that letter, they will mention the person or authority who is responding to such a request with the detailed address and communication contact details of that third person from whom we are seeking such information.
Okay.
The letterhead of the third party, email by the third party, email get from the third party.
Anyone
Sign,
else? Yes.
signature and stamp of the person confirming. Maybe at a DSC can be there.
Okay. So, you might be aware one of the fraud where this particular part was very critical. In 2009, that fraud came into light. Over there, this was the part verifying the response. Now, auditor received the response for the bank confirmations, but that what was not sent by the bank, that was sent by by the company itself. Okay, over their company, instead of they the auditor received the confirmation from the bank. Before that, company was aware that the confirmations will be going to the auditor from the bank. They intercepted those confirmations, and instead of that, they fabricated the confirmations and responses, and then they sent those confirmations to the auditor. So if when you are getting a confirmation response, it is very, very important to understand that whether we have received the response from the reliable source. Let's say in case of postal mails, hard copy confirmation that you have received, you may choose to call that person again. Okay, we have received this confirmation, have you sent it? Let's say sometimes in hard copy you may see a stamp or signature, but you don't have the record to verify this signature is the original signature of that person. So we may perform some additional procedures like calling the person, visiting the person, asking them, okay, have you sent this confirmation, to double check. In case of email, we check from which email the confirmation has been received, whether this email pertains to that particular company or employee only, or whether this is just a standard Gmail address, Hotmail address, or XYZ address, which is not of a particular domain. So from where we have received the confirmation, what is the source? Till the time you do not verify the source, you cannot rely upon the confirmation. So when it comes to the reliability, it is necessary that we understand that we can rely on the confirmations. Okay, so sending follow-ups, verifying the response is very important. Then the next part comes is, okay, this is how we need to perform the confirmation process, that okay, this is how auditor is required to maintain the control over the external confirmations. But the next part is, what if management doesn't allow you to send a confirmation? If management does not allow sending confirmations, then what? So management is saying, okay, please do not send the confirmations because we do not want you to send the confirmations.
सर रीजन जानने की कोशिश करेंगे उसने वो मना क्यों कर रहे हैं, एंड देन रिस्क असेसमेंट करेंगे, मटेरियलिटी देखेंगे, एंड ऑल्टरनेटिव प्रोसीजर्स लगाएंगे कुछ ना कुछ.
Okay, good. Anyone else with a different answer or something more they want to add? See, the request or management's refusal can be, let's say, management's refusal. I can say it can be either reasonable or unreasonable. Can anyone give me an example where I can say this, yes, management refusal is a reasonable? When management is saying that, okay, do not send the confirmation, it is a reasonable request.
Legal or law restrictions
Okay.
to communicate.
Yes. And any other example?
Confidentiality restrictions may be there in the contract between the management and the third party.
Not that much, because even the confidentiality clause is there in our agreement also, engagement letter. So based on that, management has to provide all the details to us. Hemant, can you explain your answer a bit further? Any other thing or example you think it may be classified as a reasonable one? Let's say there is a legal dispute with the particular party or the customer or anyone else which is there, okay, on certain matters. That's why you may think that they may they may not provide you the correct answer. No, Hemant, reputation usually doesn't, I will call it unreasonable. If standing confirmation is impacting the reputation of the management, that will form part of the unreasonable basis for the refusal. But yes, legal dispute is there. Sometimes the person who is going to confirm is insolvent, so they will try to confirm lesser balance. Let's say person was declared insolvent. Now that person, if you send a confirmation to that person, they may try to confirm you lesser balance because they want to evade from their liability. That is one of the valid reasons. Party is not there, they are in, there was a fraud, they are into the jail, so management might not allow you to reach out to them or something similar kind of thing. Okay, so if management's refusal is reasonable, in that case you need to perform additional procedures. Okay, and then based on that additional procedures, you need to evaluate what is the outcome. In case it is unreasonable, evaluate the implications on the risk assessment first of all, because if it is unreasonable means there is something not correct. We need to again assess the risk, evaluate the. Yes sir, yes. Yes, Pooja.
Fraud risk factor can be there. So we will have to do evaluation as per SF 240 also to check whether there can be a probable fraud risk.
Absolutely, yes. So when we are evaluating the implications on risk assessment, we need not only need to understand the risk with the unconfirmed balance or management refusal, but it could be with respect to fraud also. Okay, so evaluate the implication on the risk assessment, including fraud risk. Now, see, there are high chances that after you find management's refusal unreasonable, you will increase the risk. But there is a very less chance that you will say, okay, no, management is refusing, that is unreasonable, let me reduce the risk. That will be very, very, very less. So once you will evaluate the implication on the risk assessment, you will increase the risk. And then again, for the increased risk, additional audit procedures. If additional audit procedures are required to be performed, in that case, you have to perform and get the sufficient and appropriate audit evidence. Now, after performing audit procedures, in both of the case, if you are not able to get, if auditor is not able to obtain sufficient and appropriate audit evidence, in that case, there is one thing that you can do is modified opinion. As per SA 705. Plus, before that, you may think that, okay, in as a part of the alternate audit procedures, in case of evaluation, you may reach out to management also. So as per SA 260, we will reach out to those charged with governance also, that okay, management is refusing us. Please ask management to allow us, or please provide us authorization letter from your side. So we may reach out to those charged with governance also. If still they do not agree, perform procedures. If still not able to get the audit evidence, qualify the opinion. So the additional procedures may contain communication with those charged with governance as per SA 260. Okay, so this additional procedure may contain this particular part also. But in case of a smaller company where you don't have a separate those charges governance, this procedure might not be applicable because management and those charges with governance are same. Clear? Any doubt?
Sir,
Yes.
it is not related to the current discussion, but at earlier point you said that sometimes in confirmation designing the request, we will have to attach a management authorization for such confirmation. So does it amount to taking permission from the management, then only seeking such request, or just we have to inform management about such communications?
No, see, sometimes what happens is authorization is required because some companies will not confirm the balance till the time it is authorized. What will happen is, let's say, for example, we are the genuine auditors of the company or not, how the person will come to know or customer will come to know. If they disclose the balance or if they disclose any other information, it comes on the confidentiality part for them. So it is necessary that you obtain a authorization from the management that management authorize this person to disclose the information to the auditor, and that will not be a breach of confidentiality. Let's say from external counsel. Okay, now if let's say tomorrow you don't have a management authorization, do you think the external counsel will give you a detail of a company and its litigation freely without checking that person is an auditor or not? Or whether
No.
management wants to declare, because external counsel today has an agreement or engagement letter signed with the management, he doesn't have any engagement letter signed with the auditor. So how an auditor can ask external counsel to confirm details to him? There are high chances that without authorization they will not respond to you.
Okay, sir.
Any doubt, any questions? No. Okay, so let's do one thing. If no further questions, we'll take a break over here. Try to grasp what we have discussed, and after the break, we'll continue the session and we'll continue the topic. Okay, let's take a quick 10-minute break. Yes, sir. continue the session. So we were discussing about external confirmations. We discussed that, alternate procedures to be performed when either we are not able to send, when the management's request is unreasonable or reasonable, we need to perform additional procedures to obtain the evidence. And if we are not able to obtain, if we are not able to get the sufficient appropriate audit evidence, then we need to think of modifying the opinion under SA 705. Okay. Now, the next part that I want to discuss about is exceptions. So, exceptions are kind of that, you get a confirmation, but somehow you have an answer which is, or, confirmation which is different than you were supposed to get or you were expecting to get. So, exceptions of the confirmation. Or you can say deviations. When you get an exception or a deviation in a confirmation, what you do? What you will do? Let's say you ask someone, some customer, that please confirm your balance of rupees 100. Instead, he is saying that no, balance is 80. What you will do of that exception?
The exceptions can be indicative of misstatement or potential misstatement in financial statement, or it can also indicate that there could be a deficiency in entity's internal control system over the financial reporting. So there can be a management overriding factor, that is risk factor can be there.
Okay. But what you will do? Let's say there is a difference of rupees 20. Let's say the difference is material with respect to the overall trade receivables or whatever balance you are going to check. The difference is material. How will you difference?
We will reassess our materiality level and our reliance on the internal control system of the management that we earlier decided, and accordingly I will modify my audit scope, audit procedure, and accordingly opinion will be given.
Okay, good, very good. Yes, Ginny. Okay. Anyone else with something to add or different answer? Okay, yes, Monica. So when there are, yes, correct, Ginny. When there are exceptions and deviations, first of all, understand the reason. The reasons for exception. Sometimes the exceptions might be genuine. For example, goods in transit. Very common example where you have a different balance of the confirming party and your different balance. If it is not FOB. Second, it may be due to some other things like they have transferred the funds, but funds in case of an international transfer. Okay, sometimes you get the funds after 3 to 4 days. So you may have a different balance at the year end compared to what we may show as in or the company may show as in for their data. So there could be genuine reason for the exception, perfectly fine, but there could be misstatements also. As a result, you need to understand the reason for the exception. And if misstatement, in that case, you need to evaluate the impact on risk assessment and opinion. Why risk assessment? Because if there is a misstatement, then if I place the reliance on the controls, are the controls actually working? Because I placed a reliance, I thought the controls are working, but there is a misstatement. If the controls were working, then how we have a misstatement? In that case, I need to evaluate the impact on the risk assessment again, what procedures I need to perform, because now my reliance on the controls will go down. And again, I need to perform additional procedures. Plus, if the management is not rectifying the misstatement, then the opinion on the overall, your, overall opinion, what is the impact on your overall opinion, that you need to assess. That is what you need to do for the deviations or the exceptions. Now, the last and very important part is in negative confirmations, when we need to use the negative confirmations. So what are the scenarios where using negative confirmation is perfectly fine? Can anyone tell me such scenarios where using negative confirmation is appropriate?
So negative confirmation usually do not provide a persuasive evidence as compared to the positive confirmations. So while designing or choosing negative confirmation, we have to give preference to our risk assessment levels. If it is relatively low, now we decide that the relevant controls are effective. In that case, we may go to the negative confirmation. Or if there is a very low exception rate is expected from the response, in that case also we can take negative confirmation. And if the auditor is concerning that the matter is such that there will be no negative response will be there, in that case also he can choose for the negative confirmations.
Okay, very good.
Initially we got, I think, 500.
Sir, population size is also matter for the negative confirmation. If the population is bigger and the small amount is small, then we should take negative confirmation. And here is also one thing we should check: the controls is appropriate and risk is low.
Okay, understood. Very good. So, absolutely, correctly said that negative confirmations are, as I discussed, that it's then less persuasive audit evidence than the positive one. Means, if I need sufficient audit evidence in the quantity itself, if I need, higher audit evidence, then negative confirmations are not a higher audit evidence. They are less persuasive. Okay. So first thing is they are less persuasive audit evidence. Reason because here a person, let's say for example, if he does not confirm, then I understand everything is fine. But what if he forgot to confirm? What if there was, he never received the confirmation? That's why it's a less persuasive compared to your positive confirmation, means lesser evidence over here. Lesser audit evidence. Now, if this is a lesser audit evidence, I can use these confirmation in the areas where I need lesser audit evidence, not the more audit evidence. Let's say, which are those areas where I need a lesser audit evidence? One, the risk assessment is low and high audit evidence is available. High audit evidence is already available, or you can say, when I say high audit evidence, that means sufficient and appropriate audit evidence. Sufficient and appropriate audit evidence is already available through your operating effectiveness of controls relevant to that process or assertion. Okay, so I'm getting already sufficient and appropriate audit evidence through test operating effectiveness of the control, and the risk assessment is low. two things. Okay. Number two, scenario where population of items which are subject to negative confirmation, which are subject to the negative confirmation comprises of large number. So population of item is of large number, but the value is smaller. Okay, comprises of a large number of small account balances or value. So in that case, see, if a small account balance or value is there, again, the evidence required behind each of the confirmation is less because the account value is less. So in that case, and the items are of large number. Okay, so in that case, I can use negative confirmation. Third, a very low exception rate is there. A very low exception rate is there. Means exception rate is that very low, a person will come back to me and will say that, the balance that you have shared with me is incorrect. A very low exception rate is expected out of this. And the fourth condition is auditor is not aware of any circumstances or condition that would cause the recipient of the negative confirmation to disregard such request. Means auditor does not know or is not aware of any condition that the person who is receiving the confirmation, the confirming party, will disregard, that will not answer the confirmation or he will ignore the confirmation. So such circumstances are not available. So auditor is not aware of circumstances that would cause recipient of negative confirmation to disregard such request. Okay, so if that is the case, if all these conditions are there, okay, if all these things are present, then only you can use negative confirmation. Otherwise, do not use negative confirmation. Any doubt? Any doubt?
Sir, can you explain again the last point?
This means I'll give an example and explain. Okay, let's say, for example, Mr. A is customer. Now, let's say auditor is sending negative confirmation to Mr. A. Okay, but auditor is aware that the company which is being audited is into marketing and promotions, and they share a lot of promotional material to customers. So there is a high chance that customer will ignore this confirmation, will ignore this confirmation and will consider it as a marketing material. So here the auditor is aware that the company is into marketing and promotion. So company sends a lot of material, letters and everything to their customers. Now there is a high chance that customer, by just seeing a cover of that company's letter, will throw in the dustbin because they send a lot of marketing materials. So there is a high chance that the customer will disregard the confirmation request because the activity or the past activities that have been done by the company or the nature of the business in which the company is.
Yes, sir.
So if such conditions or circumstances are available, do not use negative confirmation.
So,
Clear.
Yes.
sir, in the module, one term is used, homogeneous transactions. What is homogeneous transactions?
Homogeneous is kind of a similar characteristics, similar nature. For example, when I say population of item is of large number but small account, not only large but homogeneous is kind of, let's say for example, you have three type of customers who purchase, let's say let's say you are having a supermarket, multiple chains of supermarket. Now how many types of customers you will be having? Customer one, which is coming in walk-in, as a walk-in, they are purchasing from you and they are going. Okay, that is one customer. Second customer is kind of corporate customers who are purchasing as a bulk order. Third customer could be B2B business. So you may have a B2C, you may have a B2B, something like that, or you may have a B2G also. Sometimes you provide services to the government agencies also. Okay, so with some goods. Now, when I say homogeneous, it should be, let's say, large number but small account of one category only, one particular type, B2C. It should not be that, okay, B2C and B2B and B2G, everything together is a very large number and very small, so I'll perform negative confirmation for all. No, you need to see at each category level. I cannot say that business to business customer, that corporate customers are same as the walk-in customers. They are different. They are not homogeneous. So homogeneous means having similar nature. I hope I'm clear. Any further doubts?
Sir, I couldn't link with any transaction which is going into the real life example, like this homogeneous product we seen in the market like milk.
No. Okay, I'll tell you. It's not the characteristics of the product that we are referring over homogeneous means. Even if you take the homogeneous milk, what is that? Homogeneous means the milk which is there within that particular, that particular packet is of similar nature, is of similar type. Okay, so that is an homogeneous milk, means after boiling a lot of things, they make it similar to other milk types. So when I talk about homogeneous, it is not the characteristics of the product, but it is the characteristic of that population. I'll give you one example of homogeneous transaction. Let's say instead of doing customer confirmation, I was doing creditor confirmation from where I purchased the goods. So as an auditor, I thought to share the confirmations to creditor. Now what is homogeneous when it comes to the creditor part? Okay, so let's say you have three type of creditors. One is a creditor that from where you purchase FMCG products. So you are again a chain supermarket. Let's say you are supermarket company. Audit is supermarket. Okay. So there are creditors from where I purchased FMCG. So these are very big companies, listed companies, manufacturing FMCG products which you use on a daily basis. Listed companies could be there in this. So big MNCs and listed entities. Then there are creditors for vegetables. So these are the small vendors who provide daily vegetable supply. Then you have a creditors for dairy product. Okay. So again, these are small vendors who provide dairy items on daily basis. Okay. Hypothetically, you assume this kind of scenario. Now, let's say when I want to send a confirmation, let's say these particular creditors or vegetable ones are 1,000 in numbers. These are, let's say, 2,000 in numbers. And this is, let's say, only 10 in numbers. So my total creditor will become here total creditor. I'm talking about as of now only numbers. Total creditor is, let's say,
3010.
3010. Okay.
But
Now,
I couldn't take a confirmation from the dairy one and the vegetable one because their number is very big.
yes. So for this, I can use negative confirmation. That is fine. These are homogeneous. Means these are of similar nature, that the amount is low, but your number is high. Can I add this 10 to this population for selecting the confirmation, negative confirmation party? Answer is no. I need to perform for this particular 10 as a positive confirmation. Reason because this 10 and this 1,000 being creditor, they are creditor, but they are not same. They are not homogeneous.
Got it, sir.
So this is, your population should be homogeneous for any of small number.
Got it, sir. Thank you, sir.
Any further doubts? Any doubts to this one? So this was your essay 505, external confirmations. Any doubt, guys? With respect to essay 505, whatever we have discussed till now. No? Okay. If no further doubts, let's quickly see from the study material and then we'll proceed to the next topic for the debate. So essay 505, external confirmations. So what is given here is the scope which is there for the external confirmations if you are using this particular process, and the objective, that is to design and perform external confirmation procedures to get the evidence. Now, when I talk about the procedure, you need to determine the information that you need to confirm, select the appropriate confirming party, design the request and send the follow-up request, and send the request follow-up if you do not get a response. Evaluate the management refusal to allow you send a confirmation. So first of all, you need to inquire why they are not allowing and to understand the reasonableness. If you think it's not reasonable, evaluate the implication on management refusal on risk assessment. You need to perform alternate audit procedures. You may communicate with the management refusal to those charged with governance as per SA 260. And if still you are not able to get the evidence and no other option is available, you need to consider the implication of the audit opinion. You may modify the opinion. Second part is the reliability of the response. You need to validate the response, that whatever response you have received, If you have doubt on the reliability, then perform additional procedures and assess the risk on the material misstatement. Again, let's say, for example, I have received the confirmation from ID, which is very generic. I sent a confirmation request to MNC. They have their own domains, like, abc@xyz.com. XYZ is their domain, but I'm getting a response back from abc@gmail.com. So something like that. I have a doubt on their reliability. So you need to assess the fraud risk over here. If you have not received the response, then alternate procedures. Now, a response to the FOSIO confirmation is necessary. Okay, then in that case, you need to assess if you have not received the response, then what is the implication on my opinion. For example, bank confirmation. Bank confirmation are such scenarios where, we need a confirmation of the balance anyhow. If we have not received, means it's a lack of audit observation or audit evidence, and we may need to perform alternate procedure, but still the result of the alternate procedure is not sufficient. It will not be sufficient because bank confirmations are such scenario where you need confirmation. Alternate procedures will not give you that that comfort or kind of evidence where you can place your opinion. So for that, you need to evaluate the implication on the opinion. Exceptions or deviations, if you identify, then you need to understand what are the reasons for the deviation, and if that is a misstatement, then you need to evaluate the impact. Then the negative confirmation. If the risk assessment is low, population comprises of large and homogeneous, very low exception rate, auditor is not aware of any circumstances that would cause the confirming party to disregard such request like marketing one. In such a case, you can send the confirmation required. If any of the condition is present, do not send negative confirmation. So this is your external confirmation SA 505 from your study material. Any doubt? Again, yes.
Sir, please upload your workings on the portal of BOS because I'm not able to find where these 505 and before your
with respect
sheet.
to this 505, earlier ones are there, but with respect to the 505, once the chapter gets completed, I upload after completion of the chapter.
But sir, last chapter, the chapter number 4, there is no assignment or notes available on the portal.
Let me check. It should be, but let me check again once again.
Okay, sir.
Yeah. Any other doubts apart from this one?
Sir, it is the point just that I asked you earlier also. But whenever the question come about internal auditors using work of internal auditor or service auditor or external party confirmation, it is the point where I always get stuck. That is, taking management permission is necessary or just informing management is necessary.
Kind of permission is necessary, not informing, because see, when again, as I said, external confirmation is something, it may contain confidential information. So let's say it contains confidential information. In that case, it will be difficult for the confirming party that, to confirm you without management's permission. So it's always advisable to obtain management's authorization, that okay, please authorize us, so that the other person can confirm.
So in case of internal auditor also we have to take such permission, na?
Yes. So if you are internal auditor of a company, okay, and you want to do external confirmation again, so how a person will come to know that you are in the internal auditor? Till the time you don't have the authorization.
My question is, I am external auditor and I want to use a work of internal auditor. In that case, I have to take management permission to use such work of internal auditor.
Use or direct assistance?
Yes, direct assistance or just using.
See, when you are using the work of internal auditor, it is similar like, you are obtaining the data from management. some data that has been prepared by the management. If management says yes, then only they will provide you the data. In case of internal auditor, they are not separate from the company. So if internal auditor is providing you the data, that is something, after discussion with the management and their permission only.
And again, in case of service organization, when entity is using service organization, and we as an external auditor want to use a service auditor report. So in that case also, I have to take permission from management.
Service auditor. So can you just repeat your question again? I did not get it.
If I choose to communicate with service auditor, in that case also I have to take permission of that management.
See, in case of a service auditor, what happens is we ask management to arrange the service auditor's audit report. So it is not that we directly contact with the service auditor. What I do is, let's say for example, there is a third party where the management is giving their outsourcing the service. We usually don't have the contact of that particular service auditor or service organization. What we do is we ask management, please ask your service organization to give their auditor's report, which you can provide to us. Now, once we get report, we validate that report that whether this is received from the service auditor. Usually, if it is prepared by chartered accountant, you have a UDIN signature, everything is present on that. If it is someone else, then we may ask, we may check from independent source, this is a report, authenticated report or not. So, and we check all the details that we already have discussed. And then we use that particular report as an evidence.
So earlier you also said that sometimes information is of a such a kind where just like you gave example of a legal advisor or a advocate where he will share information only if management is authorizing. But if say the area is such that where as such authorization is not needed, and in that case management is also refusing us to get confirmation from that third party. So whether we should confirm, we contact with that third person or not?
See, you need to understand why the management is refusing. If it is unreasonable, management is refusing, and even if the person is ready to confirm you the balance or whatever information that you want, I need to evaluate from the point of view of what information it is. It is not a very simple answer because let's say for example, I understand management is refusing. Let's say for example, it is unreasonable. Okay, let's assume unreasonable refusal is there. Now, the nature of information will decide whether should I go and proceed to an confirmation without management authorization. Am I allowed to do so? Because sometimes in your engagement letter also you have certain conditions. Okay, let's say for example, if I'm doing external confirmation, simply that I am providing a information to a person. Let's say I send some transactions to a person, please confirm it without management's authorization. It may it may happen that you are breaching the confidentiality because it might go to some incorrect person. So there is always a very thin line that without management authorization, if you are disclosing any information to any person for confirmation or for XYZ reason, there could be a breach of confidentiality. So it's not a plain and simple yes answer or no answer, but it lot depends upon the type of information that we want to confirm.
Okay, sir, clear.
Any other doubts? Just one more thing, I rechecked on the notes part. Chapter number 4 notes and chapter 3 notes are available on the BOS portal. If you still I refreshed it. If you still are not able to see, do let me know. I'll re-upload it. But as of now, it appears that it is there available. In under batch 3, you can say lecture date is 24/11, and accordingly, you will be able to see chapter number 4 notes and chapter number 3 notes.
I will see it after class.
Okay. Yeah. If any further doubts to this SA 505? Okay. If no further doubts, then let's proceed to the next topic that I want to discuss here is your SA 510. That is the initial audit engagement, opening balances. Okay, very important topic because this is the something that we do at the start of the audit. Okay, when we are starting the audit, at that point in time, we consider this particular part. Okay, so let's say, for example, initial audit engagement or opening balances. When you are required to check, we need to understand when it is the responsibility of the auditor to verify this. What audit procedures is auditor required to perform in this scenario, and what is the overall target for the auditor? Sometimes it may happen that we may not perform any procedures, but still we get a comfort on the opening balances. Yes, that is possible, and we will see such examples where even after not performing any procedure on the opening balance, we are getting audit evidence about opening balances. Okay, so let's understand what is the overall requirement under this particular essay. Essay 510, initial audit engagement opening balance. Okay. Now, the first thing I want to discuss over here is what is the role or the objective of the auditor with respect to opening balances. Like, is auditor required to audit the opening balances, or is auditor only required to gain an understanding of the opening balances? What is the responsibility of the auditor with respect to the opening balances? So what is the objective of the auditor over here? So can anyone tell me what is the objective of the auditor? Do auditor needs to issue opinion on the opening balance? Is auditor required to audit in detail the opening balances, obtain reasonable assurance, or it's kind of limited assurance is also fine on the opening balances? What is the auditor's responsibility with respect to opening balance? Can anyone tell me?
So as per last financial reporting statements, whatever the balances were closing last year, whether they have been brought forward correctly in the current year also or not.
Okay.
We have to check it.
Okay. But what is the overall responsibility of the auditor? Is auditor required to issue opinion on the opening balance also? We have last year's balance and the current year balance. Are we issuing opinion on the opening balance also? Do we need to audit opening balance? Let's say this is the first time we are auditing. Last year it was not audited. Freshly new company, means not new company, but it is just now converted into a company. Earlier it was for a partnership firm. So there were opening balances which were brought into the company.
So balances confirmation and any prior period item or material misstatement is happened or checked. Policies consistently applied with the company accounting policies.
Okay.
Like third balance sheet item or restatement, any other thing happened in the past or
Yes.
So if the previous year balances are materially misstated, that effect will also going to be continued in current year period.
Correct. Absolutely correct. Yes. Yes, Hemant. Correct. Very good. If there is any misstatement in the opening balances or a change in accounting policies, absolutely correct. So, see, the objective is required to obtain sufficient and appropriate audit evidence with respect to opening balance, but to check that whether is there any misstatement, whether the opening balances contains misstatement. Now, I'll give you one example. You tell me what auditor should do. Let's say example, account receivables. Okay. This is opening balance, or you can say last year's closing balance. And this is current year closing balance. So this is 100 and this is 150. Now, I will add misstatement, which auditor has identified. So last year the misstatement was 50. This year is 0 because management rectified it, or either it got auto rectified because of XYZ reason. So this year there is no misstatement. And you have a restated balance, like correct balance. Last year correct balance was 150. This time is the correct balance is also 150. But the reported balance, which is there, reported AR is 100 and 150. So 50 rupees were not reported. There is an understatement or under reporting of AR balance last year. Now tell me, for this particular issue, the incorrect balance of the last year, which was incorrectly reported, am I required to modify my opinion?
So in current year period also, we have to disclose this fact that due to previous year misstatement, my current balance is going to be again misstated. I have to communicate this with those charges governors.
But see, in the current year, it has rectified. So misstatement is no longer there in the current year.
So why such misstatement was there? It can be that it is due to the year-end manual entries that has been passed by the management, which can be there for indicating fraud.
Let's say, there could be multiple reasons. For example, some entries were passed which were incorrect, which reversed on the next year start because they were provisional entries. Or you can say, let's say, for example, it was a calculation error. So sub-ledger, ledger classification got mismatched. There could be n number of reasons, which is not fraudulent as of now. Let's say, am I still required to modify my opinion?
Modification to the current year's opinion?
Yes.
No, sir. It is not affecting my audit risk or the way I have to give my opinion.
Okay. So that is the thing we need to understand. Yes, when I talk about objective of the auditor, we need to check opening balance, not to identify misstatement in the opening balance or last year's audit report or last year's financial. No, our objective over here is to understand whether is there any misstatement in the opening balance which is impacting the current period financial statement. So misstatement in the opening balance that is materially affecting whether the opening balance contain misstatements that materially affect or impact the current period's financial statement. If that is there, then only I will go forward and I will report it. But if it is there in the previous year audit report, then there is something different that we need to do. I will discuss in the later stage and the later sessions also, but as of now this will not be covered over here because it is not impacting your current period financials number. It is not impacting your current period's opinion. It is not impacting your current period's financial statement. No, it is not impacting. So if it is not impacting, then it may not be treated or discussed as per SA 510. Okay. Now We will discuss one point particularly where there is a modification to the opinion in the last audit report and the impact of that in the current audit. We will discuss that, but not per se from this point that it is not impacting your current period. Okay. Now, second objective of the auditor over here is to check accounting policies. To check whether the accounting policies which were followed in the last year are being followed appropriately in the similar manner, in the consistently manner in the current year or not. So consistent application of the accounting policies which are there in the opening balances in the current period. It should not happen that last year I used some accounting policy because of which, I was recognizing revenue earlier. Now I'm following accounting policy because of which I'm recognizing revenue later. It should not be the case. So appropriate accounting policies reflected in the opening balance have been consistently applied in current period. So I will check two things. One, any misstatement impacting my current period, accounting policies, whether they have been consistently applied or not. Okay. Basically, this particular standard, okay, is applicable when you have an initial audit engagement. Now, when I say this initial audit engagement, this is something that, when this particular engagement means last year financial statements were either not audited or were audited by some other auditor, or I'm auditing for the first time. So initial audit engagement means that last year FS were not audited, or last year FS were audited by predecessor auditor. But it was not audited by me. I was not the auditor last year. So I'm doing for the first time. That was is known as an initial audit engagement. Okay. Now, when it comes to the opening balance, we understood what is the requirement or what is the objective of the auditor. Now, there are certain procedures that we need to perform. We need to do with respect to the opening balances. Okay, to get the sufficient and appropriate audit evidence about this. So we need audit evidence about this particular part. This is a part for which auditor is required to get sufficient and appropriate audit evidence. And how to do that, we need to understand. So, audit procedures for opening balance. Generally, what procedures you guys will follow to verify the opening balance? Can anyone tell me some examples? What procedures you will follow to verify the opening balances? Some examples. Okay, closing balance in the books. Compare last year FS closing balance with the current year opening. Yes, very good, Ginny. Yes, Hemant, correct. Anything else that I need to I can do to verify the opening balances?
So whether the last year balance sheet was also audited one or not, I would also look into that perspective.
Yes.
And whether during performing my current year audit procedures, whether I am able to get any evidence relating to the opening balances. If there is any such a thing that while performing current year audit procedures, I can get evidence regarding opening balances also. I would also consider that thing.
Can you give some example of such procedures?
So while confirming the balances of accounts payable balance, I am sometimes having a recalculation or back to date calculation I am performing. In that case, I am as per my calculation, if the opening balance is differing from the previous year balance, it can be leading to discrepancies.
Yes, good, very good.
Sir, I'm not confirmed, but I think that the depreciation correctly charged by the SLM method each year and should be followed in the next year too. The balance after depreciation, the assets lie in the balance sheet is properly carry forward to the next year current. That means in the current year opening balances.
Yes, good, very good. So correctly said with your examples, and this is also, the standards requires us to do. The standard says that for the opening balances, first of all, read the recent financial statements and audit report. So the first thing you need to do is read latest or the most recent FS and audit report, so that you can understand what were the balances. Okay, and then check for the material misstatement. And how will you check for the material misstatement? Is very simple. That in order to check, you need to first understand whether they have been correctly brought forward. So check whether they are correctly brought forward in the current period. For example, to understand whether these balances have been correctly brought forward, we usually ask the opening trial balance from the management. We have the last year FS, we have the opening trial balance, which is used in the current period from the ERP. And we verify the numbers between both. Because the opening trial balance sometimes give us the amount which is brought forwarded from the last year. Okay. So we verify what is the amount that has been brought forward from the last year. Is that amount similar to what which is there in the financial statement? Let's say, for example, last year financial statement account receivable were rupees 100, but this time when they were bringing that forward, okay, they, instead of bringing the 100 rupees, they brought forward only 80 rupees. So last year FS was showing correct, but the brought forward procedures performed by the management, did something wrong, and they only brought forward 80 rupees. And that happens because when, some ERPs require manual intervention to bring forward or to, bring the last year balances into new financial year. Some manual adjustment or some manual intervention is required, and at times it requires that you import trial balance from the last year, and then, you then that particular trial balance is then used for the current year's brought forward balances, something like that. Okay, so export from the last year, import in the current year. So while doing that, management missed something. You have an incorrect balances in the current year which were correct in the last year. Then you need to understand, is there any, different item which was appearing as a prior period item in the current period. For example, if management has identified any issue, any observation, or any item which is prior period items, which is disclosed in the current year's financial statement, then evaluate what is this prior period item. So evaluate prior period items in P&L of current year. You may refer to AS5, okay, where the management is required to disclose separately in the statement of profit and loss account the impact of the prior period item on the current year's profit or loss. So you need to see if there is any such item. Means if there is an item, then there are chances that in the last year that number was incorrect. That's why they are giving the impact now. Then evaluate whether the opening balances that are there, okay, evaluate whether the opening balances which are there, is there any observation, is there any qualification by the auditor in last year. So evaluate the last year's audit observations, audit qualifications on opening balances. For example, last year auditor gave an observation that accounts receivable are understated. There was an observation on the account balances. Now, currently, if you have that audit report in your hand, you have that observation. First thing you will ask management, have you rectified this? If not, means the observation or the misstatement which was there in the opening balance is now also there in the closing balance. So sometimes your last year audit qualifications will impact the opening balance and the closing balance of the current year. Then after this, after doing this, you need to understand whether your your audit procedures are providing you appropriate and sufficient audit or evidence or not. So at the end, you need to evaluate whether the audit procedures are providing sufficient and appropriate audit evidence or not. If not, then you may need to perform additional procedures. Sometimes you need to evaluate whether current year's audit procedure, okay, audit procedures performed on the current period numbers, whether current year's audit procedures are providing audit evidence on opening balance. For example, when you are sending bank confirmation, you are asking bank to confirm opening and closing balance both. Or let's say you are performing creditors confirmation. Instead of confirming the closing balance, creditors send you whole account statement which contains opening balance, transaction and closing balance. Or you have some statements of some accounts from confirmed by the third party where you have opening, transaction and the closing. So let's say, for example, not only this, let's say litigations, or let's say, you have litigations which are disclosed as the part of contingent liability. Now you want to check whether the litigations which were disclosed last year is appropriately reflected in the current year or not. So you may have those cases or so those details available with you. Similar way, there are other things, for example, audit fees of the predecessor auditor. If it is being paid in the current year, if you have if you have obtained NOC that no fees is pending, that also serves some kind of evidence, not full evidence, but some kind of evidence. So accordingly, you need to evaluate whether the current year audit procedures are providing appropriate evidence or audit evidence on the opening balance. If yes, then you need to consider that audit evidence. And if not, then you need to perform additional procedures to obtain sufficient and appropriate audit evidence, whether the misstatement is there or not. The same thing we need to apply for the accounting policies also. So this is not only for the opening balance, but for the accounting policies also. Whether the accounting policies followed in the last year are being followed currently in the current period also not. And if, let's say, for example, after doing everything for the accounting policies, for the opening balances, you identify there is a misstatement in the current period numbers because of the opening balances, then what you will do? If you identify there is a misstatement in the current period because of the opening balance, then what you will do?
I will communicate with those charged with governance.
Okay.
Accordingly, I would also do my risk assessment revision if there is any, and audit procedures को भी अगर change करना है, accordingly I will give my audit opinion.
Good. Anyone else? Something they want to add or with a different answer?
So I would also look into if the material misstatement was there in the last year figures, and why the predecessor auditor has not considered that thing. It can indicate to management fraud.
Okay. Yes. So what we will be doing is, let's say for example, I just move this below. If we have identified misstatement, that is either the opening balances contain a misstatement, either opening balance contain misstatement that impact current period, current year's FS, or if accounting policies are not applied consistently, or you can say there is unaccounted change or change in accounting policies which is not properly accounted. Okay. Change of accounting policies, if any of the thing is present, first of all what you need to do is ask management or communicate to management and those charged with governance to rectify. If they are ready to rectify, then it is fine. If management does not rectify that, in that case you need to evaluate the impact on audit opinion as per SA 705, that I may issue a qualified or a modified opinion or an adverse opinion also. So I need to understand whether management is ready to rectify or not. If management is not ready to rectify, then in that case I need to modify or even issue a qualified adverse audit opinion. Clear? Any doubt? Now the question comes on the if there is a misstatement in prior period audit report also or prior period financial statement. Okay. Now if there is such kind of scenario where you have seen that okay there is a misstatement in prior period financial statement where the auditor, preceded auditor has not qualified or he has not pointed out that in his audit report he has missed, basically something like that, then what to be done? For that we will discuss this part in detail under SA 710. when we will talk about comparative information or corresponding figures or comparative financial statement. When we will discuss the corresponding figures at that point in time, we will discuss that what we have to do when we identified that, if the president or auditor was supposed to issue a qualified opinion, but he did not issue and he missed out that particular part. In that case, what he should do, what we as a current auditor should do, that we will discuss when we will discuss SA 10, 710. Okay, so I will just point a reference over here. Communication to the previous auditor about misstatement in previous audit report will be as per SA 710. We will discuss that in detail when we will discuss SA 710. Clear? Any doubt till now with respect to this one?
Sir, we don't collect any evidence for this misstatement and don't communicate with those charged with management about the opening balances misstatement.
No, we do communicate. So we need to communicate. If we have identified any opening balance issue, we have to communicate to management and those charged with governance to rectify. That
No, sir, I'm asking for the prior period. So just you write down previous auditor, communicate with the previous auditor. In that context, we need to perform. We need to check impact on current period also, and communicate with those charged with management and gather the evidence also. No?
See, if let's say for example, this one, like if you identified issue in the last year's audit report, now whether you are required to communicate to the management or only to auditor, actually we communicate to both, not only to one person, to both. Okay, how to communicate, what we communicate and what we ask to the management, I would suggest to keep that particular discussion for SA 710, because at that point in time, I will discuss in detail about the corresponding figures and the auditor's responsibility about that corresponding figure.
Okay, sir.
Any doubt? Any question? Any doubt? This was only the SA 701 that we discussed. Oh, SA 510, my mistake. SA 510 initial audit engagement that we discussed. Pretty straightforward, nothing complex is there. Okay, now if no doubts or questions, let's see from the study material quickly SA 510, and then we will be having a good idea about this particular essay. So SA 510 initial audit engagement opening balances. Over here you have first objective of the auditor about the opening balance that contain misstatement materially affecting your current period financial statement. We need to verify that. Second is whether the accounting policies are consistently applied or not, okay, in the current period. These are the two things we need to check. For that, read the most recent financial statements, determine whether prior period closing balance have been correctly brought forward, determine whether opening balances reflect correct accounting policies, perform audit procedures on opening balances, just like to verify whether the opening balances are correct or not. For example, certain of your current period or your procedures will give you comfort. If they are not giving comfort, you may appropriately or you may exclusively decide or perform audit procedure for opening balance. Like I'm confirming the opening balance along with the closing balance, or I'm sending confirmations for the opening balances, something like that. And if your current period financial statement are misstated due to misstatement in the opening balance, then communicate with management and those charged with governance. If they are not able to rectify, if they are not rectifying, then you may issue, modified opinion. So if auditor concludes that opening balance contain misstatement, not properly disclosed or presented, then qualified or adverse opinion. If you are not able to obtain audit evidence regarding opening balance, qualified or disclaimer of opinion. Now, relevant information in the precedent's auditor report. If there is a modification in previous audit report, which is impacting your current year financial statement, then you need to evaluate the effect. And if required, ask management to rectify. If management not rectifying, qualify the report. Same with the accounting policies. If the accounting policies are not consistently applied, then you need to qualify the report. You need to ask management to apply consistently. If they are not applying, then qualify the report. So if auditor concludes that the accounting policies are not consistently applied, not properly accounted for, changes are not properly accounted for, you need to qualify or issue adverse opinion. And if there is a material modification in the prior period audit report or precedent auditor report, which is impacting your current period financial statement, then you should modify the opinion. Clear? Any doubt with this? Any doubt? Okay. If no further doubts, this was your essay 510. What we are going to do in your next lecture is we are going to continue the session. We will be starting with essay 530 audit sampling. Over there, we will discuss in detail how audit sampling is required to be performed. Okay. And then we will see related party, very important essay 550. Okay. How to audit related party transactions. And we will solve some questions on the combined topic of 505, 510 related parties and 530 in the next lecture. So I want everyone to read and be ready with the 530 and 550 essay so that you can understand what we are discussing, what we are what is the basically requirement of the essay, and you can ask the doubt. Okay. If you have any doubt for any of the point, any of these sessions, you can ask in the next lecture also, or you can ask now also. So don't worry that you need to only ask doubt for essay 530 or 550 or what we are discussing chapter number 5. No, you can just ask the doubt of previous chapters also. That is perfectly fine. Number 2, just check once again about the study, about the notes which are being uploaded on the portal. If you don't see still, then let me know in the next session. I will check internally or I will re-upload it. But as of now, I can see they are uploaded. So just check once more.
I couldn't find it.
You're not able to see?
No, sir, they are not on the portal.
Wait a minute.
Only chapter 9 or 19, chapter 1 and chapter 2 only uploaded.
I can see chapter 4 notes and chapter 3 notes, but I'm not sure why it is not appearing to you. Let me check internally why they are not appearing to chapter number 3 and chapter number 4 notes to you guys. And then let's say in the next lecture, before start of the next lecture, I'll inform you whether the issue has been rectified or not.
Okay, sir.
Okay, sir.
Okay. If no further doubts or questions, then thank you guys. Thank you for participating in today's session. I'll see you in next session. Thank you.
Thank you, sir.
Thank you. सेशन ओवर सर, खाली 1 मिनट रुकिएगा। अशोक जी, मैं नोट्स यहाँ पे अपलोडेड हैं बट स्टूडेंट्स को दिख नहीं रहे हैं। एनी स्पेसिफिक रीजन कुछ हो सकता है क्या?
सर ये आपका पीपीटी का जो नोट है वो गूगल पे अगर सर्च देते हैं तो है वो लाइव क्लासेस का पीडीएफ।
पीडीएफ है ना, तो ये पीडीएफ नोट्स वहाँ पे अवेलेबल दिख रहे हैं मतलब?
अपने आईसीआई के ऐप में नहीं है डाउनलोड सेशन में, बट इट इज ऑन गूगल।
गूगल?
Sir, I have Google also.
तो मुझे मिला है, लेकिन ये लाइव स्ट्रीमिंग क्लासेस का नोट बनकर गूगल पे।
Let me check with the team why it is not appearing in the app or क्या है issue. I'll let you know, but most probably they should appear. Let's wait for a day. You can check again tomorrow if that is still not getting reflected.
Okay, sir.
Do let me know then. Okay? जी अशोक जी, देख एक बार देख लीजिएगा ना, why the notes are not appearing chapter number 3 and chapter number 4 notes. जी बिल्कुल।
सर
Yes.
आपको मैं चैट बॉक्स में उसका लिंक कॉपी पेस्ट करके देती हूँ जो गूगल पे दिख रहा है।
Google, like on the Google search engine you are talking about, वहाँ पे they are appearing directly over there.
यस सर, ऑन गूगल सर्च इंजिन।
Okay, share me the link and let me check. That shouldn't happen. Rather, it should not be publicly available. But okay, let's see.
सर हम लोग हमारा लॉगिन करके जब देखते हैं तो उसमें अवेलेबल नहीं है, यानी जो नोट्स और डाउनलोड नोट्स एंड असाइनमेंट में।
No. See, the link which you shared is something different. It is not of. This is not the lectures notes which I have uploaded. This is different. So whatever notes I am writing and I'm preparing the charts and everything over here, it is the notes that I have uploaded, like lecture number 4 or chapter number 4 or chapter number 3. This is the PPT. This is altogether different that you have shared.
Yes sir, I told you that it is PPT.
No, this one not. I'm not talking about this one. So this is that I know. I'm talking about some my notes only. Okay, let me see. Let me see. Check. Let me check internally on this. Okay, then thank you, Ashok ji. I'll connect with the Ajit sir on this.
Thank you, sir.
Thank you. Yes.